Problems, falling stock prices, management changes, layoffs, loss of dominance, cries for help. All of this has characterized one of the most successful and respected companies in the tech world in recent years. But today, everything is different. Let's take a look behind the curtain at what brought Intel down, but also what is currently lifting it up. Investors on Bullios are watching this stock very closely, and in addition to analyzing the recent quarterly results in detail, they have even shared their views and predictions. Join the discussion with them today, via the link in the description. Chapter 1. The Fall of a Giant. Intel's stock has experienced a truly dramatic development in recent years. After a long decade of market dominance, the share price has fallen sharply since 2020. From historic pre-pandemic highs, when Intel's market value exceeded $278 billion, the company's capitalization fell by 75% to $70 billion by the end of 2022. In 2022 alone, Intel's shares fell by 54%. What was behind this free fall? There were several main reasons. At the time, Intel was facing delays in the development of next-generation chips and a significant technological lead by its competitors. For example, its competitor AMD managed to take the lead in many segments where Intel was lagging behind, particularly in server processors and artificial intelligence chips, which were booming at the time. At the same time, the personal computer market, a key segment for Intel, was declining, and the company was losing market share due to its own misguided decisions. Reports that Apple had abandoned Intel processors in its Macs and began equipping new laptops with its own M-series processors also had a negative impact. In November 2024, Intel was even removed from the prestigious Dow Jones Industrial Average Stock Index, where it had been listed since 1999, and was replaced by its competitor Nvidia. The company's management had anticipated this, and so, in the previous year, it had taken dramatic measures such as reducing its dividend by 2/3 in February 2023. In August last year, Intel paid its last dividend to date of $0.125 per share. At the same time, the company laid off thousands of employees and cut costs in order to save cash and maintain extensive investments in new factories and technologies. Chapter 2. Signs of Improvement. The second half of 2023 brought the first cautious signs that the situation might stabilize. Experienced technical manager Pat Gelsinger returned to the helm of the company with an ambitious IDM 2.0 plan to restore Intel's lost leadership. The company announced a strategy to catch up with its competitors in processor manufacturing technology within 4 years and invested heavily in new factories in the US and Europe. The planned megafactory in Ohio, which could become the largest chip plant in the world, became key. However, the project has been delayed and is not expected to be completed until early 2030. This made Intel an important player in the US government's CHIPS Act initiative to support domestic chip production, in which it was promised up to around $8 billion in state support, in the form of subsidies and tax breaks. At the same time, Intel began to win its first contracts and partnerships. In September 2024, the company unveiled a new generation of Xeon processors and Gaudi 3 accelerators focused on artificial intelligence. The goal was to challenge Nvidia's dominance in the field of AI, where Intel had virtually no direct competing products at the time. However, it was not easy. To illustrate, at the end of September 2024, Nvidia's shares were up 150% since the beginning of the year, while Intel's shares had lost more than half their value over the same period. At the time, the market was not convinced that the new products would be able to save Intel. However, positive news began to multiply. Intel won a large government contract worth up to $3 billion to manufacture specialized chips for the US military. Shortly thereafter, it also signed an agreement with tech giant Amazon. Intel will develop and supply new chips for artificial intelligence computing in AWS data centers for Amazon Web Services. This is a significant collaboration. Amazon has previously designed its own server chips, Graviton, but is seeking help from more experienced manufacturers in the field of AI accelerators. Chapter 3. Stock Growth. However, the real turning point in investor sentiment came this year. During the course of the year, a series of extraordinary events took place around Intel that can be described, without exaggeration, as historic. The company gained powerful allies, both in the private sector and at the US government level, and the market responded with a sharp rise in its stock price. The biggest surprise came with the news of the US government's investment in Intel. In the summer of 2025, information emerged that the US administration was considering acquiring an approximately 10% stake in Intel instead of further subsidies. This would be a new use of some of the funds from the CHIPS Act. Intel has already received about $2.2 billion from the original agreement, and the government would invest the remaining $8 to $9 billion directly in Intel shares. For this amount, the U.S. would acquire about 10% of Intel's shares. This would effectively make Intel a semi-state-owned enterprise. The reason for this move is Intel's strategic importance. The company is key to U.S. self-sufficiency in semiconductors, especially given the competition and geopolitical tensions with China. Even security issues were discussed. Intel's new CEO, Lip Bhutan, faced pressure over his previous ties to Chinese companies, which added political spice to the whole situation. However, after a meeting between Intel's management and the White House, a plan for closer cooperation was born instead of the original disputes. The market reacted euphorically. Within a few days, Intel's shares jumped more than 10% in anticipation that state capital would ensure stability and accelerate strategic projects. Shortly thereafter, another unexpected announcement came. Japanese conglomerate SoftBank is investing $2 billion in Intel in exchange for a stake in the company. This is the same bank that also held a stake in ARM, for example. This August investment made SoftBank one of Intel's largest shareholders. According to LSEG data, SoftBank became the sixth largest shareholder. Interestingly, SoftBank reportedly negotiated with Intel about a possible takeover of its manufacturing division before the investment, but this remained only a possibility. And thirdly, an alliance was formed where few would have expected it, between Intel and its rival, NVIDIA. In September, NVIDIA announced that it would invest $5 billion in Intel, acquiring a roughly 4% stake in the company. More importantly, the agreement includes technological cooperation. NVIDIA and Intel will jointly develop new chips that combine NVIDIA's cutting-edge AI technologies with Intel's processor architecture. The combination of the two companies' know-how could bring new innovative products to the market. NVIDIA will gain an alternative to TSMC's crowded capacities, while Intel will leverage NVIDIA's AI expertise. This news came in parallel with the announcement of a huge contract between NVIDIA and OpenAI. NVIDIA secured a $100 billion contract to supply its AI hardware for the next generation of OpenAI models. This shows the enormous demand for AI chips on the market, and thanks to its partnership with NVIDIA, Intel can indirectly get a piece of this pie. All in all, 2025 brought Intel a financial injection and alliances worth a total of over $15 billion. Investors view these steps very positively, and it is no surprise that Intel's shares responded to this news with a meteoric rise. From the beginning of 2025 to Monday, October 27th, Intel's shares rose 121%, surpassing even NVIDIA's performance during this period. And despite all this, Intel is still at the center of attention on Bulios. Why, you ask? On the one hand, the company has started to perform very solidly, but more importantly, even after this growth, its shares are still trading below their fair price. As a member of Bulios Black, you get access to the entire database of stocks with their fair price calculated. And all this after Intel's shares fell 62% in the previous year. In the days following all the previous announcements, we saw share prices jump by 10, 15, or even plus 25%. For example, in September, shares rose 22% in a single day, thanks to the announcement of an investment from NVIDIA. Chapter 4. Numbers and Outlook. Thanks to the aforementioned steps and savings, Intel's financial situation began to improve noticeably. The company returned to profitability and is even exceeding analysts' expectations. Last week, Intel reported a net profit of $4.1 billion for the third quarter of 2025, compared to a huge loss of $16.6 billion a year ago. These were the first quarterly results after the entry of new investors and the announcement of a state stake, and Intel immediately managed to surprise positively. Management attributes the improvement primarily to aggressive cost-cutting measures and greater efficiency, but also to a $15 billion capital injection that strengthened the company's balance sheet. Intel also slightly raised its outlook for the end of the year, although sales are still far from the levels of previous years. Shares responded to the results with a rise of up to 7% in aftermarket trading. By the way, you can find all the data on Intel and thousands of other companies, including clearly summarized results, analyst estimates, comparisons with competitors, and, last but not least, fair prices on Bulios. So check it out. Plus, if you join Bulios Black via the link in the description, you'll get a 10% discount on membership forever. Although Intel is experiencing a turnaround for the better, it is far from winning. Competition from NVIDIA and AMD is still ahead in the field of high-end chips for AI, and Intel will have to make a huge effort to catch up. Some analysts warn that the government's entry as a shareholder may partially tie the company's hands. There are concerns that such status could limit Intel's flexibility in a harsh competitive environment. On the other hand, proponents point out that the government's stake will provide Intel with stability and long-term financing for demanding projects, which is something investors welcome. The fact is that, thanks to state and private support, Intel has now gained the time and resources for its transformation, which was previously uncertain, so there is hope for investors, but caution is still needed.